One of the fundamental requirements of every trader is to stay profitable on the market. Now, if you are actually new to this channel, I would like you to subscribe, like, and hit the comment section below. Okay. Now, if this is your first time of watching this video, I would like you to leave a comment below on what you think about this video or your experience about the market and how you are able to stay profitable. Or if you have been making losses, you can actually let us know also. We can see on how to create contents like this also. Now, I talked about defensive in the last video. It is a continuation of the last video. We talk about trading defensively. Okay, one of the way to trade defensive is actually to be able to understand that when you make a win, you are supposed to reduce your risk on your next trade. Now, let me take for an example. If I'm making $5,000 in a trade, I traded and I risked $1,000 and I made $5,000. My next trade is not going to be $1,000 risk. It's going to be $500 risk. Now, why am I doing so? So I can be able to prevent the market from taking the money I've gotten. Now, this is what I do. I might be having a $10,000 account in my trading capital. When I'm risking $1,000, which is 1%, I don't do that. I risk 5%, 0.5, 0.5. Yeah, I'm cool with that, which is $500. And the market actually moved in my favor and gave me 10 times, which is what? $10,000. If I'm not mistaken, $5,000 rather. $5,000, yeah. So what I do is on my next trade, what I'm going to be doing is I'm going to be looking at the money that I got rather than looking at my initial capital. What's the money that I got? $5,000. Okay, now how much am I willing to lose from this money? Now what we do is the first thing we do is we manage risk. The next one we manage money. Okay, the first one is we manage risk, and the next one we manage money. Whichever way, we are still in profit. Now, one of the things that guys do, most beginner traders do, is that they manage risk but they don't manage money. Yeah, they just stick to the risk plan, and that way you're not able to stay profitable. Now, I advise and I recommend that when you manage after a trade, after a winning trade, what I do is I reduce my risk. And after a losing trade, I also reduce my risk. Why am I doing so? So I'm able to keep my mental state still in check and still in what? In profit. Okay, now the next thing I would like to recommend is trade one currency pair. Yeah, I know it may seem like you are you're going to be losing out in other currency pairs, like you're not seeing opportunities and all of that. I would recommend you stay with one currency pair. That way, when you are able to win and understand how the market works. Now, the first thing, guys, is knowledge before the money comes in. Okay, once you have the knowledge about how Euro USD or GBP USD, whatever currency pair you like to trade, is working, is fine. What I do for my mentees is that I tell them to stick with one currency pair. When you come into our academy to learn, we ask you which of the currency pair do you like to trade. Look at the market, and we'll give you 1 month, 2 weeks, or 3 weeks to observe the market. And whichever one that is cool with you, we'll start teaching you from there. That way, we know that this particular trader trades this currency pair. We have a lot of traders that trade different currency pairs, but we actually like to allow them trade with the one that they like. Okay, that way they are able to say, okay, let me understand this market for 2 to 3 4 years. That way you are able to stay profitable. But when you're moving from one strategy of one currency pair to the next currency pairs, that way you are able to make losses, because why? It will be very hard for you to understand how that particular currency pair moves. Now, every currency pair actually move with the way it's structured to move. Okay, but one of the things you must understand that is that you don't trade gold the way you trade Euro USD. The risk is different and the price movement is different. Gold does not have that deep retracement move to give you opportunity to trade, but GBP USD actually has that retracement move. Okay, so whichever one that resonates with you is the one you're supposed to be what trading with. Now, the next one is have a risk appetite. Yeah, a risk tolerance. Which of the risks do you like to take? Look at the capital you have. Which of the risks do you like to take? If you're not cool with risking 2% of your account, I wouldn't do that. Or mostly if you're trading a profit account and you're being given 5% drawdown and you're risking 2%, of course you're going to be blowing that account whenever the market retraces. One thing about Profem is that they judge you based on drawdowns. Drawdowns doesn't mean your FCL has in hit, but it simply means that the market has actually retraced and you are actually in loss up to 5%. You're going to be stopped out. Okay, now let me quickly point this out about risk management. Let's say, for example, I'm risking $1,000 and I'm putting my stop loss at 30 pips. This was a big mistake that I made, guys. I need you to listen closely. I'm risking 30% on $1,000 and I go in and put $1,000 risk and my stop loss below. What I'm risking is $3,000, not $1,000 anymore, because why? It's 30 pips. Each of the pips is 10 pips, 10 pips, 10 pips, 30 pips. So that risk is now 33,000. So what I do is, if I'm risking $1,000, I divide it by three, meaning by 30 pips. That way I'm able to risk lower on that particular trade, because why, my entry and my Excel is actually 30 pips. So that 30 pips now cover that $1,000 that is there. Okay, I think this is all for now. So I'll see you guys in the next video. This video is in series, please.